Pound dollar daily forecast May 16, fxempire.com. The pound dollar pair fell very hard on the Tuesday session to slam directly into the 160 level. The area was the site of a massive breakout last month and should therefore be supportive now. However, the price action is very bearish, and the fact that the pair is closing at the very bottom of the range is not a good sign. The 160 level should be supportive all the way down to roughly the 159 handle, and because of this, we are waiting for a daily close sub 159 to consider the support completely broken, and are simply going to be patient and wait for our question of direction to be answered. The level will attract many traders, so the move over the next couple of sessions could have somewhat of long-lasting effects. Cable, of course, is a risk-related currency pair most of the time, and as long as the markets in general are somewhat risk-averse, this pair will more than likely suffer. However, lately that correlation hasn't held true, as the pound has enjoyed a little bit of supportive action while the euro and other riskier currencies like the Kiwi and the Aussie have been sold off. However, it does look now as the market is setting its sights on the pound. The British send over 40% of their exports into the European Union, and it could be detrimental to the British economy as the EU is so financially weak at the moment. After all, if the British find that their number one customer is suddenly broke, it's never going to be a good thing. The 200-day moving average is just below the 159 level, and that is what we are waiting for, 159, to see if that gives way. Once we get a sub close below that EMA, that would also be a very bearish sign, and as such, we would be willing to sell at that point as well. Buying just isn't a thought right now. Although we could see a bounce from here, there's just so much global risk out there. We would need to see an essentially perfect setup. And until we get that, buying just isn't going to be the way we want to go.